The following is a presentation of TFNN. Live at TFNN, The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the author of Mastering Probability, Steve Rhodes.
Good morning from TFNN. Welcome to the December 4th, terrific Thursday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes. And I believe we should be pioneers of our future versus prisoners of our past. So as we begin our day, let's always remember that life happens for us, not to us. Yes, folks, life happens for us. When we live by this principle, we can find the gift in every set of circumstance. Because circumstance, it's like the wind. All we have to do is learn to plant a good sail and then just simply enjoy the ride. Hope everyone had a wonderful ride on Wednesday. And as always, I'm grateful for your presence here today, and I'm here to serve you. That means all you've got to do is pick up that phone, give me a call at 877-927-6648, or internationally, you can reach out to us at 727-445-1044. Would love to hear from you. This is Terrific Thursday. Of course, it's Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've got some fireworks courtesy of Mario Draghi out there on the stump. You know, I now we've got the king dollar, and I've been looking for a polite way to call Mario Draghi to frame him properly. Well, I thought that I just briefly heard Steve Leeson's first time that I heard this phrase, and I think it's the one that we've got to coin out here with regard, because it's a polite way to frame Mario Draghi, and that is not quantitative easing, but quantitative speaking. Now, I haven't had a chance to actually look that up, see who is it that coined that phrase, but it's one that I'm going to borrow around here, because that is all Mario Draghi is a quantitative speaker. And the reason I say that, we've taken a look in the past at the ECB financial statement. He says the ECB is going to be buying more assets. They're going to be growing their balance sheet just as our Fed did. But when you go take a look at the Fed, if you look at between 2 years ago today, you're going to find out their balance sheet has actually been shrinking, not expanding out there. So I like that quantitative speaking. Now, what does that mean? Well, if we go take a look at the euro, that's where we're going to really start off right now. We're taking a look at the euro futures. That way we don't have to worry about any kind of a delay out here. What you are going to see on this chart here, let me blow it up on my screen out here. See, I think that's Terry in the den. He said, hey, that's a good one. Good one, Steve Leisman for sure. It's the Steves, right? It's the team of Steves out here. And it's a polite way of really referring to Mario for what he is. Now, I don't mean that in a negative way. Now, if we take a look at the euro, what the large commercial traders have been doing for quite some time is they have been building a position of being short the U.S. dollar index. I haven't understood why or how. Of course, I actually understood the how was when people were going to stop believing the story. Because when you actually hear what a quantitative speaking does versus truly easing out there, and you looked at the balance sheet, you were like, well, why? There's no fundamental reason, truly fundamental with regard to what's going on in currency, for the euro to be so trashed. The euro should actually be getting stronger against the U.S. dollar index, is my opinion, and that's also my opinion, just simply take a look at balance sheets out there. So what we're looking at today could be the day of the key reversal inside of the euro. The day when people say, liar, liar, pants on fire kind of a thing to Mario Draghi. We'll see. Today, and look, we got to wait to see how the day actually plays out. Here's what I can tell you. We're looking at the euro future contract rate. So you had a bullish engulfing key reversal session. What's all that mean? It means yesterday's low and high has already been exceeded. All you really need is one pip higher. Just one pip higher, a little bit of a green bar, a little bit of a green body in a candle today, you need to have it. Right now, you've got a bullish engulfing candle. There have been a couple bullish engulfing candles along the way here, but they've never held. You had one back on November the 11th. You had one back on November the 13th. November 13th actually was the first time when I thought, okay, this could be some movement to the upside out here, but that didn't totally work out. Now, if we try to take a look at two moving averages out, let me go ahead and clear the chart out here. That way it becomes a little bit easier to take a look at. Let's get rid of the signal boxes. Let's get rid of the 50-day exponential moving average, and let's just leave this. And let me do that. Okay. So now as we take a look at this chart here, here's a 6E. It's the futures contract. Now, it's a continuous contract that I've got up on my screen. That's not what you would be trading. What I want you to take a look at is there's a, hopefully you're watching this in HD, wonderful HD on TigerTV. So, it's a great, incredible investment that Tom went ahead and made into TFNN here in order for us to be delivering these charts to you on all of your devices, in high definition, so you can see the numbers. I mean, it's great for us. It's great for you. It's great for the team, for the TFNN family. The chartreuse, there's a chartreuse or purplish type line. I don't know how it's going to come across on your screen out there, but that purplish line, that is the 8-day in this case, because we're looking at a daily chart here, 8-day exponential moving average. The white line is the 13. Now, I use 8 and 13 for one primary reason. They're part of the summation index. They're part of the Fibonacci summation index. It would be pretty disingenuous for me to look at the retracements and expansions between swing points and use 0.382 and 618 and 786 or 1.272 and 1.618 and then just simply ignore the moving averages out there. It seems to me like they also have some meaning, and they do. Now, it's a lagging indicator for sure, but what we haven't seen, other than one, really ever since looks like May in 2014, we just saw one time period that lasted for a day. I think that was it on October 20th, when we actually saw the 8-day cross back above the 13. So a lagging indicator. Today we may see the first sign of a reversal. I can tell you, we will see a change in trend when we do see that 8-day cross back above the 13. No idea whether it will or it won't happen. Look, there's A to B equals CD to the downside patterns out here. Let's go take a look at that small one. Let's put that one back up on the screen here. And the small one being, where is that small one that we wanted to take a look at? Well, this is the daily chart. This would be a small one right here, and then we'll take a look at the little bit larger one. So that small one right there takes you to the 1.219 level out here. I think there's a larger one that actually gets us back to about where we're at in price. Yeah, this one right now. Now, this one doesn't either on the 6E out here. So you don't have the completion. Really, you don't have, and really, this is the proper A to B equals C. Let me just delete that. Really, the one that should be used out here is the swing point from October 15th is the high, the low of November 7th, and then the high out here on November 19th. So, if this fails, so if today's session fails, what we ought to see is the euro head down to about the 1.2073-ish range, at least, to complete that 1-to-1 A to B equals CD to the upside out here. So what is that doing? That should be putting some weakness inside the U.S. dollar index, because remember, the U.S. dollar index, nothing but a basket of currencies. That basket consisting of the euro, the pound, the yen, the Swedish franc, the Swiss krona, and the Canadian dollar. Those 6 currencies, and it's a weighted structure, like the SPYs, like the Qs, like the diamonds out there. So it's a weighted structure. That's why we focus so much on the euro. Or next up would be the yen, and then the pound out here. If we do take a look at the U.S. dollar index, what you're going to also see out here, hey, no big shock, no big surprise here. You're going to see a K reversal session, right? K reversal session up at a level of resistance. Now, that level of resistance, I think I've got to go to the weekly chart just to be able to show it to you on my screen, is nothing more than a swing point, a previous swing point. In fact, a previous set of swing points out here. This is the weekly chart that says every time the U.S. dollar back on November 17, 2008 got up towards this level back then, the high was 89.25. If we take, that's what I'm using here as the resistance zone. Back in March of 2009, got up to a high of 89.71. Did that for one trading session. Back here in June 2010, got up to a high of 89.10. It's why these swing points are so important. It's why Tom likes to say they talk, walk, and squawk. Well, they do talk, walk, and squawk. Absolutely. That's where they give us the most amount of information. They're also logical areas of resistance. Of course, what we know is when you break above a swing point, that resistance, should change its polarity. What does that mean? That means, in essence, if it was acting as resistance, it should become new support out here. So we'll just have to wait to see how the U.S. dollar index. Now, this is a delayed chart out here. This is the weekly chart. The weekly chart's not showing any kind of reversal signal. Remember, we want to see what's going on with the daily, what's going on with the weekly. But we come take a look at the daily. Today, okay, you've got a potential key reversal session up at its highs, up at a natural resistance area. This would be a natural area. Now, what does all that mean with regard to the U.S. dollar index? If, in fact, this is how the day plays out. It's 9:16. A lot of time left in the trading session, so I can't tell you what it's going to look like, as Tom is doing his shows today from 3 to 5. But what we can do is say, what does it look like now? If, in fact, the U.S. dollar index is, in fact, making a high, begins to pull back from here, begins to pull back in not a small way, but in a big way out there, what we ought to see is the corresponding move in gold. We don't have that right now. So gold is confused. Of course, if we go back and we take a look at the current contract for gold, we know that gold is confused, but we also know where that confusion means that we're about to learn something. Because when you're confused out there, that's all that it really means. It means you're about to learn something. And in the case of Goldilocks out here, what we want to pay attention, that correlation between the U.S. dollar index and it, is what happens at this trend line. That's the trend line taking us back to that August 14th level. That's the high out there that you're using, 13.1940. You're then from your trend line, you're going ahead and you're using the October 21st level. That high is at 12.5620. We know that's a really important trend, not just like an important trend, but a really important trend, because on this trading session here where gold just simply, you want to talk about wide price spread, we're talking about gold going from a low of 1141 to a high of 1221 out there. What is that, 60, 80? It's an $80 move out there inside of Goldilocks, with increasing volume. Wide-ranging bar. That wide-ranging bar, by the way, I teach this here. When I take a look at bars, I like to take a look at them between 0 and 10. In this case here, I'll use 1 as super strong. This is a 2. This is a 2 that day, so you can't ignore that. Now, I believe that day was primarily short covering out there. That sphincter muscle got pretty tight out there for those that were short inside of Goldilocks. And I can't prove that. It's just what I can prove is that, hey, price stopped right at that trend line. If it wasn't short covering rally, if it was not a short covering rally, if it was really buyers that were stepping in, and yes, were there buyers that were stepping in? Yeah, of course so. But I think it was more a result of just simply shorts getting out of the market here. If it really was buyers, they would be able to take on this trend line. This trend line would look like nothing. It would be Kerrygold butter with just a warm knife, not a hot knife out there. And we haven't seen that yet. Yesterday, we saw price in essence get up into that trend line and back off out here. Now, look, I am longer-term bullish on gold. We were stopped out of our long positions for profits back here on November 28th on Friday when there was just all kinds of heaving that was going on, when people were throwing out the commodity traders that were caught on the wrong side of that light sweet crude trade. They were just simply throwing out everything, and that meant some of their good gold positions as well. So this trend line here, so we've got a lot of great potential information inside of the market today. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of Tiger TV. Now you can see a host, charts, and computer screens crystal clear in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We've got the Dow futures off 22 right now. S&P futures off about 3, trading out at 2,069.50. That key level now is that still is that key level, 2,070.75. So we'll go take a look at that here in a moment. NASDAQ futures are flat as we speak. Let me see. What do we have moving in the markets out here? Not a ton decorated my screen, so we won't go there. We talked about gold. Let's go take a look at silver. Now, silver, I believe, broke through that trend line. So let's go take a look at it. So it's got a little bit. So it's got a little bit of a different message. No, I take that back. It's pretty wild that trend line out here inside of gold and silver. So again, we're looking right now at the March 2015 contract. And so from a trend line perspective, if you go take the high out here, July 11, 2014, then uses your next touch point inside of silver, August 28th, what we can see is that big, huge day that we saw in gold, just like we saw in silver out here, and that was back on December the 1st. That was on Monday. We can see how price basically stopped right at that trend line as well. Now, today, silver is trading just slightly above this. So, is this a message here? Look, what I can say, folks, is that if we see both gold and silver get above these trend lines, and you're wondering, should you get into the gold marketplace, the silver marketplace, the miners, I think the answer to me would clearly be yes, you should. Now, how should you do that? Well, my recommendation is you look at all of the, let's say, 40 equities that are out there, and you select the ones that have the best chart patterns, one that have, the better A to B equals C to F patterns, ones that have high volume highs or something at a swing point that haven't been tested, things along those lines. I have a question inside the den. How do I take? How's deflation possibly impact gold out here? The best way for me to answer that question is to say, let's just trade the chart patterns. And let's not worry about any of the news. Now, if you're new to TFNN, we're basically 99% technical when it comes to trading, when it comes to pattern. Look, we got Andy Hecht. He does the techno-mental, so he uses some fundamental aspects of what's going on inside the market, but he's looking at technical patterns as well. And when we take a look at the different tools that we use, whether it's the power law vector indicator, whether it's the Chapman wave counting wave counts, whether it's Rhodes momentum indicator signals, whether it's A to B, whatever it is, whether it's time and price, whether it's swing point, whatever it is that we use out here. If we just simply said the heck with it, because we're, look, all technical traders are absolutely great on the left-hand side of the chart, right? What we've got to do is we've got to find ways to take what we know about the left-hand side of the chart and just carry that forward to the right-hand side of the chart. And that's really the key out here. That is always our mission. And if we go take a look at the left-hand side of the chart, none of us can remember the news. Heck, can you remember the news of what took place yesterday at 1 o'clock in the afternoon? For the most part, no. Maybe some of you got great memories, and some people do, and they can do that. But I can't go look at a chart for the most part and take a look at a candlestick and tell you what the heck happened on this trading session right here, September 19th. Now, this is the case of silver. What I can tell you about what happened on September 19th was the market had made a swing point in the S&P and the, I think it was the S&P and the Dow as an example. But that has nothing to do with silver. So, what happened on each of these trading sessions, I don't know. But what we can do is if we just simply trade these patterns, that's all that we focus on, then we'll be just simply okay out here. And when we take a look at these trend lines, you trade through a trend line, and that's an important message. Can things fail? Absolutely. That's why you use money management out there. Use money management, you will live to see another day. So in the case of the ES Mini out here, if we take a look at that 120-minute time frame chart right now, what we're going to see is after Mario Draghi's comments, the ES Mini sold off. Now, it's sold off. If we just blow this up a bit here, well, we'll see it's trading really right inside. So if you take a look at all the wonderful tools that we have here at TFNN, price really, the body of the candle, trading with inside the task market profile box out here. That's anywhere from the price point of about 2,074 down to about 2,067. So it's trading with inside of that box, not really releasing a ton of information. There's a blue horizontal line going across my screen, which yesterday it was right about 230. I believe, when price moved above that 2070.75, the all-important level that Stevie likes to take a look at. Price broke above that. It has come back. Now we're seeing a test of that. So in this 2-hour chart that we're looking at, which this bar here does not end until 10 o'clock, if price closes at or above 2070.75 out there, an area of resistance, an important area of resistance, will have now held as support. If you close below it, that's got some additional meaning. And we'll have to take a look at the other patterns that are in play inside of the marketplace. But we won't know the answer to that until 10 o'clock this morning. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization execution capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got Dow 21 points straight on to 17,892.
S&P off 4 at 2,070. Composite down 4 points straight at 47.71. Russell 2,000 off 2, trading at 11.76. DAX off 53. FTSE down 16 points. Gold down $3. Silver up 15 pennies out here. Platinum up $8. Light sweet crude off 85 cents out here, leading the charge to the upside. You've got Enbridge Inc. ENB is a ticker symbol up 17%, up $8 and change. AVGO, Avago Technologies up 5%. Hawaiian Electric Industries, I like that, HE, that's up 17.5% out there. United Continental Holdings, UAL, United Airlines up 3 7/10% out here. Mobileye is up a couple of bucks. RCA Cap up $1.65. Lead the charge to the downside. Gildan Activewear, the T-shirt company, they're off about 12%. I guess nobody's wearing T-shirts these days. Down $7. Pioneer Nat, maybe they do something else too. I don't know, but I do know they are in the T-shirt business. You've got the Pioneer Natural Resources (PXD) off $6. Kindred Biosciences off 3. Barnes and Noble down a couple of bucks. Dish Network off $1.80. Anadarko Petroleum down $1.37. Express Inc. off $1.39. Hey, our man David White. Now, we don't normally do advertising, but, our technology expert, and by expert, I mean absolute expert out here. He posted something inside our Tiger's Den. I'm going to go ahead and I'm going to put it up on the screen here for you as well. What he wanted to alert everybody, if you're looking for a laptop, and I know that laptop's not the right word for it, what is the type of word? A netbook, maybe, or something like that. It's called the laptop, an Asus 11.6-inch laptop. $99 is what it's selling for. Can you believe that? $99. That's got 32 gigs of flash memory out there. It's on sale at Best Buy. So look, if you're looking for a laptop under $100 or a notebook, I don't know what the right terminology. It's called laptop here on the screen. If you're looking for it, I'd go check that out. It comes as a recommendation. I don't know. Well, maybe I shouldn't use the word recommendation. He just simply was pointing out the great offer that was out there. Pretty cool for sure. Just think about that technology that you can have inside your hands these days. Just simply amazing out there. Now, let's go check out these markets. Let's go see what it is that we've got going on. Let's take a look at some of these equities here that are moving and grooving. Don't really want to go back and necessarily take too much of a look at the S&P until we see the ES Mini, I should say, until we get towards that 10 o'clock time frame to see how, in fact, things trade. Let's go take a look at the Gildan Activewear. Let's see here. They're experiencing strong replenishment orders. Let me see here. So what? They announced 20% increase in quarterly dividend. That's not helping out. Their fiscal sales, $2.36 billion versus $2.18. That's not helping. Q4 sales were up. What was their earnings? Net income, $127 million versus 96. Holy cow! These guys must have missed estimates or something big time, because they certainly seem to be doing it on the numbers, except for the numbers with regard to what stock traders are doing with the equity. Gapping down this morning, trading out at $51.11, already 434,000 shares. This is an equity that doesn't trade that type of volume. Typically, it's 100, 200,000 shares, 300,000 shares. So today, big day to the downside out here. Now, the first sign of selling inside of a Gildan, that took place right back here on a gap down. That was back on the trading session of July 31st. The actual top of that gap down was the low bar from July 30th. That was $60.13. That was, we can see as price got back up into this area back here on October 31st, did it with 200,000 shares. Remember that 200 going against 777. Acted as resistance. Much like we took a look at that U.S. dollar index out there, any kind of resistance line. This is nothing more than the equity pulling back to an area where it broke down. Little shooting star candle back here on November 17th, that had 278,000 shares. So we already knew that it couldn't bust them up. Well, today it's trying to bust them down, and bust them down by getting below this hammer candle out here on October the 10th. That had 218,000 shares. So where's this equity headed to? Well, let's go take a look at some other swing points out here. This thing right now is pulled back into a level of where this thing had a sign of strength. Okay, so that's what you would be looking for as far as where's this equity headed to. You'd go, where's your sign of strength, or where's some type of high volume low out here? Well, in this case here, the sign of strength actually took place on May 2nd. This did 857,000 shares. Where do you go back to? You go back to the lightest volume bar that you can find back here, or to a swing point. Hopefully, it's just a couple of bars back. Well, in this case, you're going to have to just go all the way back to the swing point, in my opinion. That's back here on April the 11th, to try to identify where that area is. So and let me just put the box around this, because here's the day that I would say where it really broke out from, which is right here. Which is right at the 49.97 mark, which is in essence is about the low of today. The low today here is $50.11 out here, and it's been moving higher really ever since then. So we'll see where this thing ends up. Now, what this could now set up with today's move is a consolidation pattern, and it's a pretty decent consolidation pattern if this is really the bottom of it, because you're looking at about a $10 consolidation from $50 to $60, and that is on ticker symbol GIL. Gildan out there, the T-shirt company, they call it activewear, so the activewear company out there. We've also got moving to the downside. Let's see what's going on with Kindred Biosciences. Nothing good, that is for sure. Kindred Biosciences trading health. That was at yesterday afternoon. Well, trading has resumed here today. It's down 32%. I think it's trading. Is it trading? Let me see here. No, it's been halted, period. Okay, so it's been halted, so we'll skip Kindred Biosciences. Never good scene out there. Let's take a look at Barnes & Noble. BKS is the ticker symbol out here. They're down 13% off $2.83 out here. We take a look at where's this headed to. Well, it's going to head for the swing point. That's what it's doing. Its swing point out here is October the 15th. That low had 725,000 shares. Done 333 already, 333,000 in 10 minutes of trading. So it's going after that swing point with a vengeance. Now, this has had a couple of signs of strength. This one is right here. Is probably where we'll find out what Barnes & Noble wants to do. Let's see a trading session from May 27, 2014, about $17.19. The volume that it did there was 3.9 million shares. If it keeps up this pace here, it's moving into a breakout area with too much of volume, and that is on Barnes & Noble. BKS is the ticker symbol. Let's look at a couple things here, move into the upside. How about Enbridge Capital? ENB is the ticker symbol. What do they got out here? Large scale, their restructuring plan to drop down its liquids pipeline out here. Let's go see what the stock chart is. Man, this thing is up nicely today, 15%, and has some really good volume behind it. Let's expand out the chart, see what it's doing. So it's got done 1.2 million shares here this morning. Its most recent swing point, September 19th. Remember, we were looking at silver. I just accidentally picked out there's no accidents in life, right? Picked out that September 19th date out there. Well, September 19th inside Enbridge Capital was its most recent swing point high. Only 1.6 million shares. You've done 1.2 so far, 1.3 so far here this morning. So this thing is at a new, it looks like a new all-time high out here. Let me put this on a monthly chart. I could be wrong. Let's go find out. No, I'm not wrong. This thing is at a new monthly all-time high, and it's been a nice little rocket ship. Now, the month that we're dealing with here as a swing point would be May in 2013. That had 16 million shares. We're only in the 4th of December, and you've got 5 million shares. So what Enbridge Inc. is actually doing on a monthly basis, we'll assume that it closes above that swing point. If I take a look at, let's look at the larger pattern inside of Enbridge says that this thing wants to make a move up to 74, maybe 84, maybe 95 bucks out here. That's what's going on the monthly chart. ENB is the ticker symbol. All it needs to do is close above this 48, 41 level out here. That's the very large A to B equals CD. If we look at the weekly chart for this equity, there's probably some smaller ones that would stick out at us that we would want to go ahead and take a look at. As far as intermediate term, boy, this thing has just simply been making A to B equals CD patterns all the way up. I would say for your intermediate term pattern, that A to B equals CD that we'd be looking at, you just probably use this swing point right down here. I'm just going to use December 2nd, the week that beginning, and then for my B point out here, looks like the week that began September 15th, and your C point the week that began October 13th. You can see how it's made that 1 to 1.272 wide-ranging bar, obviously, with today's action. This probably moves up to a 1 to 2 level, so around 66 bucks. So $62 to $66 looks like that's where Enbridge Inc. wants to head to. Let's take a look at Hawaiian Electric. Let's go to Hawaii. HE is the ticker symbol. That's a wide-ranging bar for sure. That's the weekly chart that we're looking at. Let's go take a look at let's stay with the weekly chart here for a minute. Where is Hawaiian Electric? This thing is electric. So you've got a swing point that it's dealing with right here from a weekly basis from July of 2012. That's 1.8 million shares. You're at 6.7 million shares already for the week. So where is Hawaiian Electric headed to? Well, let's go take a look. This thing is looks like it's headed up to I imagine they're in Honolulu, so it's headed up to Diamond Head for sure. And Diamond Head inside a Hawaiian Electric on the A to B equals CD chart says probably 44.52. 1 to 1 takes you to 39.85. I don't see that as being the spot where this will stop. Let's take a look at expansions. Let's take a look at the butterfly pattern setting up here. Potential butterfly cell pattern setting up inside of Hawaiian Electric. Well, you got the 1.618 butterfly cell that would complete at around $40.66. So $39.85 to $40.66 is where that would complete. But I'd have to say if price continues to move up like this, I say it continues moving even beyond that. But that would be the butterfly pattern that you would be looking for. HE, again, is the ticker symbol there. All right, let's take a look at some of the mining equities out here. So you got gold pulling back $5 right now. King dollar back about 300 ticks out here. So we're seeing that little divergence. Let's take a look at the Rand Gold, see what it is doing. GOLD is the ticker symbol. Let's go. Let's put this on a daily chart out here, get a feel for what's going on the daily time frame. Daily time frame, just an inside bar here this morning, so no big move, no big shakes out here. If we take a look at where that resistance level is going to be, the gap down that took place on November 28th. So that's at 69.90 is the number. If you can see price close above that level, it will have repaired a open window. That would be good. Of course, taking out the swing point from the high of November 25th at $71.36. Do it with more than 900,000 shares. Then you'd have an A to B equals CD to the upside. Inside of Rand Gold Resource, that A to B equals CD to the upside. That'll take you to a price objective of about the 1 to 1 takes you to 77.90. But I'd have to say, 77.90, 81.53. More likely would be the scenario for where price would move to. But at this stage here, not releasing a ton of information to us. Certainly not bearish, just an inside day. Gold Corp out here, GG being the ticker symbol. Trading out at 20.53. Of course, we know that Gold Corp, we're looking for this to clear 21.42. Most people would take a look at this and say this is a pretty bearish-looking pattern out here. Let's take a look at the trend line, short-term trend line inside of Gold Corp. Let's use the swing point from August the 14th as our touch point, and then let's use the, how about this? Let's use the touch point of October the 15th. What we can say about Gold Corp at this stage, interestingly enough, this has got two competing trends, right? You've got horizontal trend and a diagonal trend. If we take a look at that diagonal trend, the red line that I just drew on my chart out here, we saw Gold Corp get above that level. November 25th, tested on November 26th, gap down on November 28th. That's the day when everybody was throwing up if you were long light sweet crude. And so they were throwing out the baby and the bathwater all at the same time out here. Very next trading session, though, that was on Monday of this week, price got up, couldn't clear the horizontal resistance level, but ever since then it's been traveling, and it's above the trend line out here. Now, nothing floats my skirt like to break a trend by moving sideways out there. I'm sure it doesn't float up to your, float your skirt. Is that probably a bad metaphor there, probably a bad visual metaphor, if nothing else. But you know what I'm trying to say. I don't get too excited about a price moving sideways when it breaks a trend out here. So that says to me, hey, the more important trend for Gold Corp to break is going to be that horizontal level of resistance, $21.42 out there. If we take a look at Apple, let's go see what Apple is doing here. Up a quarter right now, trading out of 116.17. Pretty hard for me to make any kind of sense, quite frankly. Of course, that means I'm confused, and whenever we're confused, it means we're about to learn something. Excuse me. So in the case of Apple, that means we're about to learn something too out here. If we do take a look at the retracement that took place, small one, from bottom to top, about a 0.382 retracement. So we had big volume. You know, it's pushing to the downside. Can't argue that. Nonetheless, if you clear the 119.75 level, it's a daily chart we're looking at. That could set up a huge A to B equals CD to the upside. Probably the likely outcome when we take a look at the longer-term charts out there. Is for probably what Apple actually wants to do. And yes, I am. I apologize for that visual there, Z, in the Tiger's Den. I got to come up with some better visuals for everybody out there. All right, now we've got the Dow. She's trading off $33. The Dow, super strong. Super strong. S&P down 3. Composite is up 6 points. Russell 2000 off 2. ES Mini trading out at 2070. How about that? That 207075. See if she can get above that by 10 a.m. This is Steve Rhodes from TFNN.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, folks. Dow's off 41 points right now, trading out at 17,870. S&P down 4, trading at 2070. Composite is up just slightly, up $1.64 as we speak right now. Okay, so what is it that, just in case you're not going to be with us for hour number 2 of the Trader's Edge, what is it that one should be paying attention to? All right. Let's take a look, and this is going to be end-of-day stuff, but just so you know, if in fact the Dow ended up being down 42 points, where we're at right now, so 17,870, the S&P about where it's at right now, well, I don't know about the S&P, the composite, somewhere where it's at, flat, a little bit down. And the New York Stock Exchange, let me see, what's the New York Stock Exchange at about right now? No, these numbers they're guidelines out here. You're really going to have to check back with me. The New York Stock Exchange down about 40. What we would actually have is what I was talking about yesterday as the signals. We would actually have all of the summation indexes, not all, but the summation index for the New York Stock Exchange, NASDAQ Composite, and Dow below the zero line. I'm sorry, summation index is turning down, price oscillator below the zero line out here. And that's really been the danger signal we've seen, especially in the Dow, in all of them. But the Dow over the last couple of days here has really done an extraordinary effort of staying, of having higher highs with a decreasing price oscillator. That's the bottom portion of my screen. Let me do this here. It makes it maybe easier for you. I know you're watching this on TigerTV and you got small devices. That's this bottom portion of my screen. See this price oscillator? It made that peaked out on October 31st. Now, that peak, by the way, is an initiation move. All right, so getting up to that level, that price oscillator, the level out there was about inside the Dow, right around the 4 level. I know it might not seem like a lot. It's all relative. That's actually what is seen as an initiation move. When was the last time we saw those types of highs? Well, you saw that back in February 14, 2014. That turned out to be an initiation move out there. We saw that back here in September 2013. We got a retracement, which is what I was expecting this time around. We still may get that retracement, then price went ahead and continued its move higher. So these are initiation moves. That's why it lines up with everything we take a look at, long-term charts and so forth. So long-term, the markets want to absolutely move higher, and maybe even the short-term. A lot of time left in the trading session. If the Dow ended up closing down around 44 points, it's a very good chance that its price oscillator will be below zero. We haven't seen it, in essence, really below zero with any meaning since, looks like about September 22nd, September 23rd. And then obviously that didn't lead us to it, but we saw the decline that took place into that October 15th area out here. So that's really one of the things that you want to be watching for today. Of course, if that VIX index, let me see where that's trading at as we speak right now. That's going to be up a bit. Geez, it's only up a nickel. It's really not up much. The VIX index here trades below the 50-day exponential moving average. Well, let me go switch over to this chart here. That's always bullish. Well, it's bullish from this standpoint. I like to use the VIX index as a liquidity gauge, and that's where I use that 50-day line out there, 50-day exponential moving average. When the VIX trades below it, it just tells you a lot of liquidity. So right now, even with the markets trading off a bit, man, the message here is lots of liquidity. And it's really the same message, I believe. Let's go take a look at the Euro-Japanese yen here real quick. Yeah, the Euro-Japanese yen is screaming nothing but liquidity out here. Here's the daily chart. And this thing is actually trying to take out a swing point maybe from November 20th out there. So, buy the dips because there's lots of liquidity. That's really the message of the markets as we speak right now. Folks, it is Terrific Thursday. Thanks so much for joining us. Oh, as always, a pleasure to be here with you. Have a great Thursday. Otherwise, hey, you know how you can have a really great Thursday? Stay tuned to TFNN all day. Hour 2 of the Trader's Edge coming up next. Look forward to seeing you soon. Take care.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.